Anything else you want me to show you? All right. If you are finished, just click submit. This lets us know that you have uh, finished the exercise. And again, just click the submit button here. There is no need. Again, we are not marking these. It is simply a complete, incomplete sort of thing. All right. But yes, once you're finished, click submit, and then you don't need to worry about it. All right. Exercise 1-4, that is optional, so I'm going to leave that to the end of class, and we'll see how much time we have. What we do want to look at are case studies 1-1 and 1-2. It's 7:15. Yeah, so I'll get started on 1-1, and then we will have a break at 7:30 and then continue. Oh, sorry. Exercises you don't need to submit. I mean, you can. It's not going to hurt anything, but it's the case studies that you submit. But yeah, no, you don't need to submit the exercises. Sorry, I misunderstood, misread that. Yeah, so case studies you submit, exercises you've got the option to, but you don't have to. Case studies are what we're looking at. Okay, so I think so. I think so, Valerie. So let me. Don't want writer view. I want instructor view. There we are. For level 1. Okay, so I'm sure it's fine, Urja. I'm sure it's fine. We're mainly, as I say, these aren't for marks. It's just a complete, incomplete sort of thing. Now that said, this case study 1-1. So, right, so we are looking at the case study for Sylvie Casper. So let's review her for a second. So Sylvie Casper, born in 2006, so she's a bit young. She lives at 10 Creekview Drive in York City, and postal code for the region. We've got a telephone number and an email address for her. She's in her last year of high school. She worked during the summer as an interpreter and worked part-time as a clerk at a convenience store from mid-August till the end of the year, and also earned some casual income distributing flyers. She's never filed a tax return before. As a Canadian citizen, she wants to answer yes to the Elections Canada question. Okay, so I'm going to work through her return. Okay, yes. You do want to make sure you're on the right province. Okay, so I'm going to work through her return, and we'll break at 7:30. So, so I have to make sure I'm doing this in the instructor view. If I do it as the writer, then I'm changing it for everyone in the country. All right, so here's our official solution. So for Sylvie, and let's just make sure for British Columbia, there we go. And also, you want to make sure to close your other windows so they don't time out on you. So for Sylvie, we should have a refund of about $596. So as I work through, if you have a different number than that, then keep an eye out for what might have thrown you off. So I'm going to go through showing you all the entries and discussing the key points. And then at the end, if you still got any questions, we can help you with it. All right, so if you have this correct number here, good, then you should be all right. So, so for Sylvie, first name Sylvie, last name Casper. This is going to be rounded to the nearest dollar, Mohammed. So that's most likely right, but hang in and we'll see it in a moment. So first name Sylvie, last name Casper, social insurance number 870-021-250, and the date of birth 01/09/2006. Now, that means that in 2024, she's only going to be 18. She will not be 19 by the end of the year, and that means she's not going to be receiving the BC sales tax credit. All right. Her nothing unusual, change of surname, anything like that. And her address is 10 Creekview Drive, Your City, British Columbia. So you can change this to Vancouver or Your City as desired. And put in whichever postal code you like, as long as it begins with a V. Mailing address did not change in 2024. She did not reside outside of Canada during the tax year. Province of residence, British Columbia. Home address is the same as the mailing address. She did not own or hold specified foreign property. She does have Canadian citizenship. She is authorizing the Canada Revenue Agency to give their information to Elections Canada. In this case, we've selected yes to the BC transplant question. Presumably, this would be if you asked the taxpayer and they had said yes. Do not worry about that in your example. If we do not have this information, we would normally put it as no. Whoever prepared this just defaulted that to yes. All right, so telephone number 555-781-2067. Marital status is single, no change to marital status or number of dependents. There we are. All right, did she work as a volunteer firefighter or search and rescue volunteer? Nope, nothing like that. And indeed, nothing on this second page here at all. So we'll just calculate and continue. So the return is not being prepared under the volunteer program. Language she's going to indicate that yes, Sylvie is filing a return with the CRA for the first time. This will allow us to file the return. If we do not indicate that this is the first time she's filing, the CRA, when we try to e-file it, they will return an error in saying, what's going on? This person has never filed before. So we need to select yes to indicate that it's filing. And if she was filing for previous years, working in high school, we would indicate yes here as well. All right, so she didn't open an FHSA. And now we simply move to her T-slips. So there's a T4 from Heritage Village, T4 from Easy Mart, and there's some other income. Okay, so the T4 from Heritage Village. The key thing to indicate here is that she's exempt from CPP on her Heritage Village one. So this would mean that she was under the age where you would be having to pay CPP. So notice that her box 26 is blank as a result, and nothing is withheld in box 16. However, her EI premiums of $94.82 are entered, and her income tax deducted $595.60 for British Columbia. This will be her refund. No other boxes here. For Easy Mart, the T4 for Easy Mart for $46.18. Let's have a look at this one. So $46.18, but here she is not exempt from CPP. So $300 in box 40 will not affect anything. Remember that the $300 in box 40. Box 40 is for taxable benefits only. So casual income is not going to go in the box 40 on the T4. Casual income is entered in the other income section, which I'll show you in a moment. Right. And in this case, it's not going to affect her refund or anything like that, but in some cases, it could easily affect things. Okay, so 4618 in income, 174.82 in TPP contributions, and then box 24 is 4618. Box 26 is 4104.88. So that would indicate that only some of her earnings were pensionable, which would make sense if she was working and then, became liable for CPP during the time she was working. And box 18 for EI premiums is 76.66. All right, and nothing else with this T slip. Then for other income, this is where we enter the casual income as employment income she received that wasn't reported on a slip. And that's all we need for this return. There's no other forms to be done here, so we will move to the review section. So the other income, so the 300 is here under other income, and that will come up. Remember, you can enter other to bring it up, or you can enter line 10400. It'll come up top of the page there. And the 300 is just entered here. Employment income received that wasn't reported on a slip. So other employment income, which is what this is reported on line 10400. So there's no errors or warnings to be dealt with. So in this case, it's fairly straightforward. The income is less than the basic personal amount, so all of the income tax deducted will be returned. So the total tax credits are $17,454.92, which is of course much higher than the taxable income of $10,662. So all of the income tax collected will be refunded. If we are to look at the T1 in detail, when we look at the Schedule 8, she's only liable for CPP for 3 months. So her basic exemption is $875. When we run the numbers through the Schedule 8, we can see that she's actually under-contributed. But an under-contributed contribution is fine. She does not need to include anything. So the basic contributions, then the 145.44 that she's contributed is what is done, and the 29.38 in enhanced contributions. So this is the T1 itself. Just wanted to show you how for the Schedule 8 that was calculated. So there's no CPP overpayment or EI overpayment. If anything, it was an underpayment, which we don't need to worry about. All right. And again, we can access the T1 just by clicking preview here. All right. Now I see, I'll expand your question so I can have a look at that. The program should automatically deduct an overpayment, right? So if there's an overpayment, the program will calculate that. So, so Schedule 8, let's blow it up a little bigger, walk through in a little more detail here. So the key thing is she's only liable for CPP for 3 months. So her exemption is therefore lower, and her maximum pensionable earnings are well below the threshold. Okay, so the total pensionable earnings are 4104.88. The first 875 is exempt, so her actual amount that's subject to contributions is 3229.88. Then the actual contributions made from box 16 is 174.82. From that, 145.44 would be the base contribution, 29.38 would be the enhanced contribution. The required contributions, however, are higher. So 159.88 is what's required as the base contribution, and 32.30 is the enhanced contribution, right? And that's why we have these results in brackets here. It's an underpayment. All right, line 26 in the schedule. 8357.22, Mohammed. You're showing that as, I think I might know what the problem is, Mohammed. To be up by that amount, remember that you have to have the correct amount in for box 26. And the box 26 amount is 4104.88. Check that amount. If instead, okay, yeah, right. With an amount of 4104.88, that should give us these required amounts here. So your line 13 should be 192.18. So Mohammed, where does your result break off from what I have here? Humaira, you're matching what we see here? Oh, okay. Okay, so where does yours differ? Line 5 is 98.16.88. I think I know what's happened with yours, Humaira. And Mohammed, your line 38 is 145.44. Well, 145.44 is correct. Yeah, 145.44 for line 38 is correct. But for line 5, so yeah, Humaira, your line 5 is quite high. Um, yeah, that's really high. I don't quite. Hmm. So if your line 5 is 98.16.88, Your line 50 is 2938. Yep, that's correct. Let's get back here. Line 6 should be 875. Yeah. Right. So this, I think, if you're getting a weird result up here, remember that Muhammad is correct. For the first job, so the first job is exempt, but the second one is not. So for Heritage Village here, you need to have box 28 selected, indicating that this is exempt. And the box 16 amount and the box 26 are both going to be blank. Yep, right. So if you don't have this selected as exempt and you just had the box 14 in box 26, then that would throw you off. Okay, I think we got to the bottom of it there. All right, it is 7:35, so good work, everyone. Let us take a break of 15 minutes. Absolutely, absolutely. But by practicing, this is how we get a hang for things and figuring out where trouble might come. Because in the field, we might need to be able to, we might have to, a difference like that could cause us a significant difference. All right. So on that note, though, let's break. It is 7:35, so let's break. My notes here should be okay. So case study 1-2. Oh, well, welcome back, everyone online. All right, so case study 1-2 doesn't look too complex, so we will have a look at this. And then in our remaining time, we will look at exercise 1-4. And if there's any additional questions from last class, we will have a look at those as well. But I will make sure to go through case study 1-2 before we get to questions. So for 1-2, first off, let's have a look at the textbook here. So this is for Woody Waterbucket, who is single and lives on Fire Lane in your city. And Woody works as a mechanic at a new and used car dealership, but every year he also puts in about 250 hours as a volunteer firefighter, for which he received an honorarium in the amount of $950 in 2024. He has a T4 and a certificate for this. He's also inherited the family's vacation home in California, used personally by Woody and other relatives. And at that time, the value of the property was appraised at $180,000 Canadian. He's not sure whether this information is important for his tax return. He is a Canadian citizen, wants to answer yes to the Elections Canada question, and we've got his T4 slips here. Pardon me. And anything else to add here? So we've got the T4 from auto sales. We have the T4 with the firefighters honorarium, and then there's no additional things we need to enter here. Excellent. All right. So nice, fairly straightforward then. So let's close out our examples for Sylvie, and then let's have a look at Woody. All right, so for Woody, there should be a refund of about $971. Let's work through and see everything that we need to enter here. So first name Woody, last name is Waterbucket, social insurance number 870009438, and birth date is December 18th, 1990. All right, for the address, it's 500 Fire Lane in your city, British Columbia. Mailing address did not change, and he did not reside outside of Canada. Province of residence is British Columbia. Home address is the same as mailing address, and did not sell. Principal residence. He did not own or hold specified foreign property. So the answer here should be no. All right, students, why is the answer here no? I know you all understand this, but just for anyone who's downloaded this online, why is it no? Good. It's a personal use property, right? He and his family are using it. There is no expectation of business income or anything of the sort from it. It is a personal use property. All right. Woody has Canadian citizenship and exercises the CRA, authorizes the CRA to give his name and address to Elections Canada for the voters list. And again, BC transplant, there should probably be a no here in the absence of specific information from the client. All right, telephone number 555-555-2244. If you change this one to a BC appropriate area code such as 604 or 250, that's certainly fine. It is getting increasingly difficult to tell just by looking what geographic area an area code refers to. I think British Columbia now is up to 4 area codes or something crazy like that. So back when I was growing up, there was only one. That's the 604 is the original one. Okay, Woody's marital status is single, so no change to that and no dependents. Here, though, we need to indicate that yes, Woody completed at least 200 hours of service as either a volunteer firefighter or search and rescue volunteer, and we would indicate that yes, he is a volunteer firefighter. All right. Apart from that, this section is blank. Woody does not have a disability. There's no teaching supply expenses. He did not buy a house. Does not belong to a religious order. There's no additional deductions, no labor-sponsored funds tax credits, no unusual employment expenses or anything like that. So we will calculate and continue. This is not being prepared under the Community Volunteer Income Tax Program. The language he wants to use for communications is English. He is not filing a return for the first time. And he has not opened or inherited an FHSA. Okay, so for Woody, it's just a simple matter then of entering the 2 T4s correctly. So for the first T4 for auto sales and services, so the box 14, 48,950. The box 22 amount for BC is 5947.20. Box 16, 2704.28. Box 24 and 26 are the same as box 14. For box 18 is 812.57. Box 44 for union dues is 480. And no other unusual boxes here. For the Your City Fire Department here, the only thing that needs to be entered is the 950 in box 87 for the Emergency Services Volunteer exempt amount. And then we would calculate and continue. So providing that that has been entered correctly, then it should appear on the T1. So on the T1 here, the software should automatically handle this. Like so. When we look at the T1, the 950 is automatically added to the $48,950 plus 950 will give us 49,900. So you don't need to manually add it, the software will do it. But notice that this is contingent on us having indicated that Woody has the here in the client interview section, this is why it's important to specify that he had the 200 hours of service. If he didn't have the 200 hours of service, he would not qualify for the credit and get the 6,000. Because we did, then the $6,000 volunteer firefighter credit will appear down here. And as well, the British Columbia credit will appear here for the provincial firefighters amount, 3,000. Right? So providing we indicate that he had the minimum number of hours, then the software will take it from there. Return this one. Which will leave us with, scrolling back up, a refund of $970.93, and no CPP or EI overpayments or anything else. All right, so in British Columbia, anyway, this is a fairly straightforward. Now, if we were to change this, let's say he didn't have 200 hours of service, in that case, the 950 would not be included in income, but the 6,000 would not be claimable for the volunteer firefighters credit. So there would be no credit here under the volunteer firefighters amount. So in that case, the refund would be only $134.78. So in this case, it's clearly more beneficial to claim the volunteer firefighter credit. But there may be cases we encounter where someone doesn't have the requisite number of hours. So we always have to ask for that, and we always have to make sure that they can provide us with proof of that. Typically, in my clients' cases, they just provide a letter from the fire chief in question. All right. So then, when we calculate and save, we'll get back to our original refund of $971 or so. All right. Is there anything else you guys would like to look at with case study number 2? As I say, it's relatively straightforward in British Columbia anyway. Anyone else have any warnings or errors or anything like that? Yep. Getting a refund, $970.93. Refund of $970.93. Right? All good? Everyone in agreement there? Excellent, excellent. Okay, so these lessons are intended to be a little bit open-ended in case students have had any troubles or need extra time with anything. So in our case, we do have enough time to work through exercise 1-4. So I'll be doing that for the balance of the time. Now for 1-2, someone, was it Valerie? You wanted to see uh, how we handle the T3 for exercise 1-2? Thanks, Valerie. All right, so yeah, let's have a look at that. So for their T3, let's see how we put it in here. And let's pull that up. So for exercise, backtracking the gender because we didn't have time to do it in class. So for this T3, for Reed and Benita Chase, they had a T3 here from Horizon Investments. So the box 21 was 378, box 25 was 3615, and box 26 was 145. And then there were some investment management fees of 285.50. Now, the investment management fees are not entered in the T3 section. And then we have some dividends as well. So we have some dividends, some capital gains, and some foreign income, and then some other income. And again, this is exercise 1-2. So the dividends, we enter the actual amount here, and then the taxable amount in box 50, and the tax credit in box 51. Shouldn't box 50 be 455.40? Let's have a look at that. Do I have that handy? Yeah, that should be 455.40. That's correct. All right. Yes, 455.40. Good. But box 51, the 68.40 should be correct. Yeah, that's right. Okay, and then the 378 in box 21 is entered as capital gains. The box 26 is other income, 145. And then for other information, we would put in the non-business income in box 25, foreign non-business income of 3615. And so, remember the purpose of the June question here. There was a proposed change to the capital gains rate, which in the end did not go through. So this is actually an academic question. For simplicity, we can simply state that the amount in box 21 was either realized before June or after June. Notice that in many cases, these will already be reported in a box 52 or a box 53. In this case, there isn't a box 52 or 53, so we just need to indicate before or after June. I don't think in the problem there was any indication of when the gain was realized. Right. So in this case, we would just enter on one or the other. The key thing to remember is that it's just for information purposes, and it's only going to apply in the year 2024. Originally, there was going to be a different capital gains rate applying, but the CRA reversed that, and so happening before or after the June 25th date has no effect on the return. All right. And for the amount for the countries the business income was received on, we simply indicated multiple, and I believe that was in the problem. Yes. Let me make a note though about that. Right. The other thing, so for the T3, the only other thing, now notice if we wanted to, if it was shared between the two of them, we could again split the slip by indicating yes here, but we don't have to. The investment management fees, remember, those will sometimes appear on a T3, but they do not correspond to a box number, so they need to be entered separately on the return. And you've got a warning says the amount in box 21 includes. Right, so that is just the warning there is just if there is a box 52 and 53, and in this case there isn't, right? Box. So if you had a box 52 and 53, the total of box 52 and 53 would equal box 21. That's what that warning's about. Yeah, you can just ignore it in practice, certainly in this case. But yeah, that's what'll happen. This is only going to be an issue with 2024 returns. The proposed capital gains change has not been implemented, and as far as I know, has been shelved indefinitely. Although governments can change their mind, but for now but certainly nothing is going to be affecting 2024 returns. Key thing to remember: the investment management fees are entered on the federal worksheet here. That's right. Exactly, Valerie. Exactly. It's just reported on the federal worksheet here. So this is where we report any investment income or dividends that were not reported on a T-slip. So foreign income in particular, foreign investment income would go here, as well as any carrying charges, management fees, etc. So the 285.50 in management fees would go here on the federal worksheet. Exactly. Do I get an error about the carrying charge as well? What kind of error are you getting, Valerie? About the carrying charge? Ah, yes, the T691. You can just ignore that. Um, the T691 is for federal split income. This only applies in very complex investment situations. Um, Basically, when someone has limited partnerships, partnership income, things like that, it typically only applies in very complex investment situations. So it brings up a warning, but you can just simply select ignore. Okay, no worries, no worries. Yeah, we should add a note about that. I will pass this along to the appropriate team. I don't think, most likely in the actual textbook itself, it explains this, but it's not in the problem, so that could potentially mislead people. All right, so let's close out that one then, and then let's have a look. So for Robert and Margaret Marshall, so let's work through theirs for exercise 1-4. All right. So for this one, we're going to be, let's have a look at their situation. Now, and as always, let's look at the textbook first to see what we're dealing with. So we have Robert Marshall and Robert's wife, Margaret Marshall, and they've got T4A OAS, T4AP, some U.S. Social Security benefits, and a T4A from CIBC Mellon Trust, T4 RIF from Scotia Trust, and T4 RSP from RBC Financial. Okay, so this is a case we're going to be dealing with some income splitting then. All right, let's try working through it, and if we have enough time, we can compare it to the quote-unquote official solution. All right. All right, so first we begin with Robert and Marshall, and social insurance number for Robert is 870001542. And Robert's birth date is October 8th, 1957. Okay. And no change to surname, no name of legal representative, nothing like that. For address, Robert's address is going to be Unit 109, 1334 Canyon Drive. Canyon Drive, and your city, province, and then postcode. All right. And nothing complicated in terms of residence or anything like that. So province of residence, British Columbia. No move to a different province. Not a diplomat. Was not in prison. Did not sell a principal residence or flip a property. No specified foreign property. Yes to Canadian citizenship. Yes to Elections Canada. No to BC transplant. And also no to FHSA. Telephone number here, 555-217-4091. And marital status is married. So again, when we select married or common law, we open up these other fields. But the marital status did not change. This isn't a new marriage. There was no separation, temporary or otherwise, or for medical reasons. And they want to do a coupled return, right? So as I was talking before about coupled returns, when we select yes, we will create a second return for the spouse. If we select no, this means the spouse is doing their own return elsewhere. Depending on the software package you're using, doing a coupled return like this is often advisable, even if they have done the return elsewhere, simply so that you have it available to refer to. All right, so yes to coupled return, but no to dependents. And then notice that sections now open up over here for the spouse and partner, but we can still continue with Robert. Again, notice that Robert's name has appeared up top, to help us visually distinguish the two. Right, so Robert was not a volunteer firefighter, and there is no disability, anything like that, or teaching supply expenses, no home buyer's amount, no religious order, additional deductions. So we may need to put the 15% of the U.S. Social Security over here. So we will have a look at that. But that is for Margaret in any case. All right. And no labor-sponsored funds, no employment expenses, no employment of any kind, actually. So we're just going to calculate and continue. So this return is not being prepared by volunteers. English is the language we're going to use. And of course, Robert, this is not his first tax return. No elections or anything like that. Now we move over to the spouse's return. And again, notice that the color up top has changed to this dark burgundy color. All right, so this is for Margaret Marshall. Right, 1 second. All right, 4702. And Margaret's date of birth is 1958, so June 14th, 1958. Oh, and her social insurance number, 870-004-702. Okay. No change to surname. There's no legal representative. Mailing address, same as Robert's. Province of residence, also same as Robert's. Sometimes it can give us headaches if the province of residence is different. Home address is the same. Not a diplomat. Margaret was not in prison. Did not sell a principal residence or flip a property. No specified foreign property. Yes to Canadian citizenship. Yes to Elections Canada. No to BC transplant. And Margaret doesn't have a separate phone number, so what most likely we would put in would be the same phone number for each of them. But of course, we would always want to confirm that with the client. Notice that Margaret's name has now appeared up here. Margaret also did not work as a volunteer firefighter or anything like that. So if necessary, the foreign income exemption, we would enter that up here. I suspect with U.S. Social Security insurance, we might be entering that now. All right, so we can move on to the tax documents in a moment. I think I'm going to take a moment and just see what the textbook has to say about U.S. Social Security. U.S. Social Security. So notice it can be selected under foreign pension income. All right. Excellent. All right. And note that BlockPro will automatically claim the exempt amount as a deduction. Perfect. 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 All right. So let's begin with Robert, or rather, finish up here. So this isn't being prepared by volunteers. Margaret wants to use English. Margaret has, of course, filed taxes before, and there's no FHSA. Right. Notice it then puts us back on Robert's return to enter Robert's information. So the bulk of the forms are going to be Robert's. Only a couple of them are going to be for Margaret. All right, so for OAS, okay, I'm going to be like that, huh? Yeah, probably because I had that other tablet tab open. Okay, so we're on Robert. Okay, T4A OAS. So we're going to be entering information for both of them as we go, just working through, and then both returns will be calculated simultaneously, Gujinder. All right, so for the OAS for Robert, so generally the best practice is to go through and enter all of the slips for one person and then for the other rather than jumping back and forth. Because if you jump back and forth, it's much easier to miss something. All right, so for Robert, his box 18 is the same as his box 19, 861804. That's his taxable pension paid, and nothing else on the T4A OAS. For his T4AP, again, this is from Service Canada. All right. Okay, so the box 14 is 9030, and box 20 and will also be 9030. Box 22 is 1200. That is income tax deducted. Remember, if you're entering these manually, you've got to watch out for income tax that's been deducted at source. Box 22. And box 23, the number of months is going to be 12. Hang on, everybody. 1 second. I just got to mute myself for one moment here. Sorry about that. Oh, and how do you get the box 14? So it's from the problem. When we look at the box 14 here, down here, right here. Okay, so 9,030 in box 14. Remember, the box 20 will always be the sum of all the other subsidiary boxes. And again, the arrangement of the fields in the software mimics what you would see on the form itself. So these fields are across the top, and then these ones are down the right-hand side of the form. All right. We'll calculate and continue here. Then let's enter our T4A from CIBC Mellon Trust. So this is normally going to be just general pension income, and indeed, in box 16 is amount for pension or superannuation, so 19,500. Box 22 is 1950, which is 10% of that amount. And then box 119 down here is premiums paid to a group term life insurance plan, and that's going to be 145.60. And Mohammed, you're having trouble getting the box in the system. Box 14 on the T4AP, you mean? Your boxes have a 0 in front. Uh, for CIBC Mellon. At the top, 016. Yeah, I also have that. I'm just shortening it to a box 16. 016 is 16. Yeah. I'll show you where to enter the U.S. Social Security, not to worry. All right, we'll calculate and continue. All right, so we've got our T4A, T4A OAS, and T4AP. Then we are going to enter the T4 RIF from Scotia Trust. In box 16. Box 16. Box 24. Excess amount, excess withdrawals is for 5,000. And box 28 is the income tax deducted, which is 10% of box 24. Remember, the regular withdrawals, the 8,900, typically income tax is not withheld on that. It's only going to be 10% of any excess amount in box 24. And there is no box 119. Oh, I'll show you. 1 second. Okay, but these are the only 3 entries we make for the T4 RIF. And were any taxable amounts in box 16 transferred to an RRSP or an annuity? Nope. We'll just so that. So for the T4A from CIBC Mellon with the box 119, box 119 is at the bottom, right? Open-ended boxes at the bottom of the form are selected down here. So typically the arrangement is any boxes up here in the top, these are boxes which are hard printed on the form. They will appear on any form, even if they're blank. And then the open boxes at the bottom where any various numbers can be printed in them, that's where we will find things like a box 119. Okay, Gurjinder? All right. And that's for the well, the box 119 is for the T4A from CIBC Mellon Trust. There is no box 119 on the T4 RIF. And for the T4 RIF, we don't say yes to any of those, and because this would be if the taxable amount was being transferred to another RRSP, and we have no information to indicate that any such transfer is happening, so we can ignore that safely. So we can just put no here. If we don't have any indication in the problem that a transfer is taking place, we don't need to worry about it. Okay, and the last thing, the last slips we have is a T4 RSP for Robert anyway. And box 16, 4,600. These are annuity payments that would qualify for the pension income amount. And then box 30 for income tax is going to be 10% of that, or 460. All right, and then we can calculate and continue. Okay, so now we've got everything in for Robert. Now we're going to, we'll just double check, but we've got our T4A OAS, our T4AP, our T4A, the T4 RIF, and the T4 RSP. Everything seems to be here. All right, we'll now switch over to Margaret. And for Margaret, we need to enter a T4A OAS and the T4AP and the U.S. Social Security benefits. So let's start with the T4A OAS. So the box 18 here, 861804. Right, same as box 19. Okay. And for the T4AP, all right. And for Margaret, it's only 2110. Again, if we have, right, so box 14 here is 2110. And that's going to be the same as box 20, 2110. And the number of months in box 23 is again going to be 12. All right, the main difference for Margaret, security benefits. So foreign, so we're going to want, so we would enter foreign, other foreign income other than business income. So notice there's a section here for foreign pension income under here. So we select the United States as the country, and we would enter the U.S. Social Security insurance rate. Mm-hmm. So for 2024, it would be 1.3698. Back here. You do have the ability to look up monthly exchange rates if it was issued at a specific time during the year. And again, this is from the Bank of Canada itself. Where did you get the rates? Oh, sorry, I did that a little fast. There's a couple links here. So the section we've selected is federal foreign tax credits and other foreign income. And at the top, you indicate, and all on the same page here. So in this case, there's only one. We select United States up here. Now, it doesn't automatically populate it with the exchange rate for the year. I suspect in the live environment it will, because this is a relatively new feature. So by clicking on one of the links here, we can either get the US monthly rate if it's income from a particular month, or in this case, because it's for the year, we can click on the link for international annual exchange rates. And again, this is from the Bank of Canada, so we're only choosing official figures from the Bank of Canada because that's very easy to defend. And here you can simply look up the country by the given year. So for 2024, for the US dollar, it is this amount here, 1.3698. Okay? Yeah, sorry, I went through that a little quickly. So in general, for any foreign exchange rate, some software packages will automatically populate that. If they don't, it's important to draw them from an official source or as official a source as you can get. Some countries, particularly very obscure countries, may not be monitored by the Bank of Canada, but you would nonetheless would want to get as reliable a source as you could for the exchange rate for the year. So in this case, there's no foreign employment income, but if we scroll down, we have a section for foreign pension income, and we will select the U.S. Social Security benefits with the 15% exemption. So the income Margaret received from this pension is $2,000 Canadian. So in this case, we've already run the exchange. If this was $2,000 US, it would convert to 27.3960. If the amount is already in Canadian dollars, and some people will provide us with an amount in Canadian dollars, then we just use an exchange rate of 1. To give us our Canadian dollars amount of 2,000. Right, but that's the only foreign pension or other foreign income in play here, and there was no foreign tax of any kind withheld. So currently, Robert's looking at a refund of $9.58, and Margaret's not looking at a refund at all. But we have entered all of the various forms. So the key question is then, do Robert and Margaret want to split their pension income? So when we do this, we need to answer a few questions. So who's the pensioner? Now, before we go to this point, we may want to have a look at the summary for having trouble, just to refresh our minds of who's got the larger income. So under the summary page, notice that we can click up a view called a family summary, where we can see both of them combined. And when we see them next to each other, we can see that Robert's income is much higher than Margaret's. So he's going to want to split at least some pension income and move it over to Margaret's, because right now Margaret's income is, taxable income is less than the basic personal amount. Your refund for Robert currently is $1,009. Okay, well, with the exercises, we're not too worried about as worried about the final result, although that is a little interesting. We can track that down later if you want. I do want to make sure I cover the major points. So, first of all, we select who's the pensioner. That is the person who's going to transfer some pension income to the other person. This is not necessarily the person with the higher income. So now let's select Robert. Now we want to enter the amount of tax deducted from his pension income that's eligible for splitting, because remember, the income tax is also going to be split. So that would be the income tax on the T4 RIF, I believe, on the T4A from CIBC Mellon Trust, and the $500 on the excess amount to Scotia Trust, that excess amount can't be split. So we can do the addition in the field here using a plus sign. So 1950 plus 460. So this gives us the total amount of pension income that can be split is 16,500, and that is 1/2 of the total pension income, which is, sorry, I'm just doing some math in my head here. 27.9, 28.4, 29.33. Yeah, 33,000. Good, good. So, which page are we on? So this is under optimization. And remember, you can always look on the left-hand side to see where. So we are under review, optimization, and under taxable income. And we have selected, yes, they want to split their pension income. Now, this diagram here is intended to let you compare different scenarios. So, if they do not split their income, then Margaret doesn't owe any tax, and Robert gets a refund of $957.79. If we split the maximum possible, so 16,500 being transferred to Margaret, so then the total refund for the couple would be $1908.73, which is an increased refund of $950.94 over the base scenario. In this case, the software has opted to transfer almost the maximum amount, $15,173.95, which gives us an identical refund. So I'm not sure exactly why the software opted to do that, other than to not raise Margaret's income more than absolutely necessary to get the maximum value. Now, if we wanted to, we could tinker with this amount using the lock symbol here. So currently the combined is a refund of, the combined refund is $1908.73. If, let's say, we wanted to split 14,000, and then calculate and continue. Let's go back. Splitting 14,000. It's still showing the optimum amount here. So, but the total refund up here, 1,022 plus 789 would be just over 1,800, and that is less than 1908.73. If instead we split 15,713.95 as suggested. we can see it's 1,059 for Robert and 850 for Margaret, which is that optimized value of 1908.73. I'm not sure exactly why the software, because this seems to be the same net result as simply transferring the maximum, but I assume the software's logic is to not raise Margaret's income more than absolutely necessary. Did I type in the wrong amount? 15,173.95. Ah, yes, right you are. There we go. Good catch. So that would give 971 refund for Robert and 938 for Margaret. Interesting. So in this case, doing it this way, Margaret has a slightly higher refund than splitting it 50-50, but the total refund for the two of them is the same. Oh, okay. Thanks, Valerie. Good catch. All right. For errors and warnings, again, the T936, we can ignore that. That's just for complex investment situations. And the send worksheet, Gurjinder, I do see your request. Again, we're just going to indicate that the information that we have entered matches that which we see in Represent a Client. Just to get rid of that error message. So to answer your question, Karina, is it more beneficial to split pension income 50-50? That will always depend on the individual situation. In this particular case, the refund seems to be the same regardless of whether you split it 50-50 or in this case 46-54 or so. But this will vary depending on the individual circumstances. So that's why it's very important that whatever software you have, where you're doing pension income splitting, that there be some kind of mechanism to adjust how much you split so that you can get a sense of why the amount is being split in the amount that it is, because taxpayers will want to know, okay, why are we splitting it for this amount rather than some other amount? So it's always good to have a sense of that. And Gurjinder, you just wanted to have another look at the foreign tax credits and foreign income. Again, we can do that. So the name of this is a little complicated, but if you just type in foreign, notice that your options are going to be here for foreign business income and foreign everything else. So that's why we're selecting it here. By and large, foreign tax credits are beyond the scope of this course because they tend to get, they can get very complicated very quickly. But all that's necessary here, to give you a better view of it, is that you indicate the country that the income came from. If you had income from another country, you would simply add an additional foreign page, like so, to indicate the income from a second country, like the United Kingdom, for example. So it does allow you to identify the income by the country it originates from. And remember, if we want to get rid of one of these, we can just tick the box and then select the garbage can, or we can click the three little dots to delete it there. So do we indicate the type of pension Margaret received? Yes. So there's an entire section on this page for pension income. So if there was foreign employment income, we would enter it up here. Foreign interest and dividends, they are entered down here. Capital gains, rental income, and so on. But the pension is entered here. And you'll notice there are specific entries for U.S. Social Security benefits, U.S. IRA accounts, and then all other pensions, either foreign lump sum pension payments or another foreign pension. For some countries, there is an exemption for pensions, but that exempt amount needs to be entered manually back in the tax interview section. U.S. Social Security is the only one which is common enough that the exemption is actually built into the software here. So here you just enter the amount of the pension. In this case, we have the amount in Canadian dollars. If all we had was the amount in rate up here, and that's all we need to do. The $2,000 Canadian is what was received in U.S. Social Security benefits. So when we look at Margaret's T1 here, we can see that $300 of the foreign pension income is deducted here. So remember, the entire 2,000 Canadian in foreign pension income is entered here under other pensions. So we enter the entire amount, and then the exempt amount is then deducted on line 25600. Okay, Gurjinder? So notice the software automatically knows how to handle U.S. Social Security pensions. For pensions from other countries where there may or may not be exemptions, we need to enter the exempt amount, calculate and enter the exempt amount manually. And because foreign pensions potentially come from many different countries, often we need to look up the details of the specific tax treaty between Canada and that country, the specific details of what kind of foreign pension it is, and so on and so forth. Okay? But that's all for the data entry for exercise 1-4. And we are, okay. But it should, if you enter U.S. Social Security benefits at 15%, it should show up here. Okay? If you have, that's odd. Okay, and you're entering the entire amount here. So if you've got 2,000 here and it's a U.S. Social Security benefits 15%, then 300, which is 15% of 2,000, should appear on line 25600. Oh, make sure you are looking at Margaret's return and not Robert's, right? That's the other thing I would suggest. Just make sure you're looking at the right taxpayer. Okay, all right. If you still have trouble with it, let me know and we'll see what we can do to figure that out. But that's the basics of it. Where do you put the 2,000? You put it right here. And the 2,000 will then show up on line 11500 as other pension. 3 boxes. Foreign pension income. So there's foreign amount and Canadian dollar amount. And there's nothing in the foreign tax amount because no tax is withheld on U.S. Social Security pensions. Is what you're seeing on my screen, does this match what you have on your screen? Hmm. And yet you say there's 3 boxes. Okay. Well, it's in the right box, so it should. When Valerie says foreign income versus pension has 3 boxes, yeah. So not foreign employment income up here. Yeah, but Valerie is pointing out that there's 3 boxes under foreign employment income. Foreign pension income will be down here. Okay. On that note, though, we are coming up on 9 o'clock, so I don't want to hold anybody hostage here too late. If you want, just hang around in class and we can play around with it some more. However, so do you have homework, Karina? Well, not so much homework as home fun, I would say. So for next time, your home fun, work through case studies 1-3 through 1-5 for British Columbia and complete and submit them. Okay? Um, as you can see, these shouldn't be anything that's too beyond the scope of what you've already done in the course. It's more about figuring out how to do the various things we've done in the course in the tax software. Okay, so for next time, please complete and submit these before the next class. And again, the submit, remember these aren't being marked. It's more of a complete, incomplete sort of flag. All right. Oh, and there's that thing I was looking for. All right. Very good. Okay, so is it purposeful that one of them is not Canadian, or is it a typo? In 1-4, Valerie? Case study 1-4, let's take a moment and look at that. Um, Case study 1-4, not exercise 1-4, yeah? And so that's for Matthew Collins. No, that's purposeful. Yeah, Matthew is not a Canadian citizen, right? That yeah, that's not a typo. We want you to uh, just be able to understand how to do the data entry. Remember, the Canadian citizen question is only significant. Its only effect on the tax return is the Elections Canada question, right? So if we were doing this for marks, this would be a great question for are the students paying attention? But it's not for marks. It's so you don't need to worry about that. All right, good. So then, everybody, for next time, then case studies 1-3 to 1-5. So I will see you all back here next Wednesday. And for those of you who've downloaded this from the website, thanks very much for listening along. I will see you a week from tonight. And let's